Alright, so I got stopped out. I'm really happy with the performance of this trade, just like the overall control that I had in this morning. Even though I got stopped out, and I do still think that my draw on liquidities are correct, I really couldn't be affected any less. Like, this is a great morning. The way that I positioned myself was just like, it was perfect. I knew exactly how much the market could take from me. I didn't have any expectations because I know which market environments we're trading in right now, and that it can't just randomly start running all-time highs, right? I'll get into the explanation of why I took the trade in a second, but I knew how much the market could take from me. I followed my process, and I was completely disconnected from the outcome of this trade. So, first things first, I'm not gonna move anything other than the 9:30 open, or sorry, the 1 minute. Here's the chart execution where it gets stopped out. But so I see 9:30 opens, and I'm just waiting. I'm just waiting. And I see 9:45 makes a high above the 9:30 opening price, so that puts price in a state of a premium. And inside of this 9:30 opening price, we're also within this up closing candle that expands through all of this buy side liquidity, and also on about a 4 hour, I think ES engages another, it's around optimal trade entry of the higher time frame range, but it engages 4 hour buy side liquidity, making the SMT even deeper on the higher time frame between MNQ and MES. And this gives me confidence that price is, that smart money is accumulating short orders, because you can see ES is engaging these buy stops to enable an expansion lower. Without one of the two pairs delivering to some form of buy side liquidity, the algorithm would not release price to expand lower in a sell side delivery program. So with SMT, with the right time and the right price, that gives me confidence that this is going to be the hive session. And then also we have the lower time frame SMTs forming around these short-term highs, very specific short-term highs that I anticipate to hold relevance within my process. You can see prices dropping. I don't even have any FOMO. I already locked out because, you know what? I'm going to go through my entry here in a second, but I'll explain to you precisely why I don't care one single bit about, like, if anything, I'm happy that my draw on liquidity was correct. There's nothing that I could have done differently to still be in this winning trade, and you know what? I'll give the logic about all of that in a second. But so pretty much by now I already waited for confirmation. I saw this down closing candle change the state in delivery and close below the mean threshold of these two down closing candles. So I was about here. I entered. So the first entry, I'll show you here. The first entry was right here because I was waiting for this up closing candle. So I was sitting here waiting with my finger on the trigger, waiting for price to close below the mean threshold of this order block, and then I would have entered at market right there. And then since it closed above there, I already had a plan that I was going to draw a limit order right up to the consequent encroachment. I should have ultimately just put it at the 0.25 just because NQ is so weak. I'm expecting price to only deliver to areas like that. And then, so that was the first entry. And then stop was, of course, on the SMT's highs. But I didn't get filled. So the next thing was, I knew after price delivers to this buy side inefficiency and closes lower, I was watching price meander around back and forth right here, and I was waiting for that candle to close, because I knew immediately once this candle closes, we're gonna see a big down closing candle, which we got. And then another thing on the 15-minute, you can see from the inception of the sell side model to the terminus of the market maker sell model. Look at price delivered to that just perfectly. um, I entered another one at, even though it was going kind of against what I had planned out for my position sizing. I had confidence in this day because from the midnight open price we have absolutely zero delivered any kind of sell side liquidity. So I might not know what this day will be. It could be a buy side expansion, but it's most likely not, because smart money has not had an opportunity to accumulate any kind of long positions to any kind of sell side liquidity that we've manipulated to below the midnight opening price. This, along with the higher time frame SMTs and the immediate delivery above the 9:30 open price in responsiveness to a higher time frame premium price, CISD, gave me confidence to have draws on liquidity lower. These relative equal lows that just happen to be previous cycle low. I think it's the 5 to 7:30, or no, sorry, 5:30 to 7 cycle. These lows, that's what I was targeting for a first contract. And because I had these two really confident draws on liquidity, I was, hold on, because I had these two really confident draws on liquidity, I wanted at least two contracts on so that I could leave one for previous cycle low, which would have gotten smashed, and then a final one for take profit, or for midnight opening price, which just so happens to be at the consequent encroachment of the new week opening gap. But anyways, so why am I not affected by the fact that I got stopped out? Why? Because if you really think about it, if I didn't get in here, a thought that I was thinking was like, man, if I just left my stop loss on this external high, I'd still be in this winning position. All right, that's a very quick thought that went through my mind. But then I asked myself, like, here, let me get these executions off the chart. Then I asked myself, if I didn't enter right here, I wouldn't have entered at all. If price came all the way back up, I was saying, oh well, if I just left my limit order and just waited to get limited, then I would still be in. But no, after all of this price action forms, I wouldn't have been in this trade. I wouldn't have. I wouldn't have gotten in. I would have been like, oh, that looks kind of gross, right? Because quite frankly, it does. For shorts, this looks gross. And so, what am I supposed to do with that? I'm supposed to say, oh, you were supposed to know exactly what was going to happen in the future to be able to catch this? No, that's not how that works. And just because I didn't catch this trade, letting myself get stopped out, like I left my stop exactly where it was. I think it was at the consequent encroachment of this buy side wick, because we'd already delivered into it, and I wanted to see speed away from that, use any of these discount arrays to send price lower. But literally, oh, this is a beautiful trade. But literally, yeah, totally, literally. But I wouldn't have gotten in this anyway. I wouldn't have been comfortable sitting in this past the stop loss where it was at. And since I had gone through the process, I had pretty good confidence in this sell side delivery. Letting it come up and take my stop was completely fine. I knew how much the market was allowed to take from me. I knew where I wouldn't have been comfortable in the trade anymore, and it stopped me out. Now, with all of this being said and done, letting yourself get stopped out on mornings like these is going to save you more than you will over the next 5 trades, where because you think that this one trade means that, oh, the next trade is going to be like this, where I can just stay in and hold, and then with a big stop loss, and then price will magically go to my take profit. No. Letting yourself get stopped out on trades like these for minute losses, $123 losses for what would have been like a $400 win, that's that's a decent amount on a 50k account. But letting yourself get stopped out on trades like these is going to win you in the long term, because the next trade, if you take and it's like this, it's probably gonna run up to your stop loss, and then you have to work as triple as much trades to work off this one, especially if you didn't size correctly when you could have just left this. So that's one thing. And then it's like, why am I supposed to be sad about this? I'm perfectly fine with this stop loss, and I was again, like, not trying to sound egotistical, but like, of course, again, I was correct about the draw and liquidity of the market. Not gonna lie, it has been pretty difficult within this past few weeks, but I was correct about the draw and liquidity. I would take this trade over and over again with the same stop loss, and then, the next morning that I found a trade, I might find a trade like this and get it again, and I might get stopped out. All right, so then here, let's do this logic. And I might get stopped out again. Alright, that's another 1R lost. Alright, I might even lose again. That's another 1R lost. And then you hit the one winning trade, and then guess what? You're up 1R. So that's just the logic that you have to use. You can't let FOMO or anything like that change the trade that you're within, or change any future trades. Look at previous cycles low acting as resistance on this price. And then it'll send price down into this midnight opening price, and then into Monday's low. That's my drawn liquidity for this day. But that's just beautiful. These kind of mornings is what I'm here for. I'm not gonna say it because it's not true, but I couldn't care less about a payout. Like, just seeing price do what it does, it's just like, it tickles a spot in my brain. Nothing else can. But anyways, enough oiling up price action. But yeah. So overall, this is a really great morning. I'm gonna input everything into Notion, and I'm gonna go shower and be on with my day. I didn't care about what the outcome of this morning was when I came into this morning. I don't care about the outcome leaving this morning. I'm actually very happy with this outcome. But until the next, I'll see you then. I'm just wondering if there's anything else that I needed to know. No, that's about everything, but I might just leave this on. Just watch this, finish my coffee, and watch this deliver to my precise targets. Or let me just leave this where I got filled. Got filled about there with the stop loss. I think my stop was about right here. Just above the consequent encroachment. But just for transparency's sake, we'll leave it at this high. This price is not random. Price does not deliver randomly, people. Shoop. Another thing that I'm proud of is the fact that I locked myself out, because I was watching this. I was like, man, been waiting for this all week. But no, I was just like, all right, let's lock out before I decide to take more trades than I am permitted to take. I just spilled coffee on myself. But really happy with this morning again. Perfect. If you see this, you see this. If you don't, you don't. I'm gonna listen back to it. But beautiful, just beautiful morning. Like, and the only reason, so like usually when it's pushing all-time highs, or like we've already had a monthly inception, I wouldn't anticipate any kind of SMTs to really hold any relevance to me, just because it's probably just lagging. But because it's in convergence with the fact that, here, let me just ignore all of this, just look at the line that I'm drawing. Monday's open. Where's Monday's open? Look at this, because there's absolutely zero, because it's in convergence with time, with SMTs on these highs of day. I'm anticipating that we're gonna rush down to this, at least this weekly opening price. Oh, wait. So midnight open price, that's not my final draw. My final draw on liquidity for the trade would have been this, but for the price movement, it's this new week opening gap that lines up with this weekly draw on liquidity. Because if you're able to see that price is sequenced to be a sell side delivery program, the algorithm by minimum will reprice to the weekly opening price. And something that ICT doesn't talk about is when you can anticipate low resistance liquidity run just using the weekly opening price and understanding weekly power of 3. If price has to meet this minimum objective, because it's only delivered buy side liquidity, it has to be a down closing week. It has to, by minimum, meet this weekly opening price. So if price only has a day or two to get down to it, and it's far away, what do you think it's going to do? It's going to expand with speed. Well, what does speed mean? Speed means low resistance liquidity, but I anticipate high resistance liquidity at the top here, which is why my stop ultimately really should have been larger. But, you know, we've already covered that. You know, maybe it's something to consider later on, but I'm fine with what happened. But if price only has a day or two to get down to this opening price by minimum, because the algorithm demands in order for it to be a down closing week, which we've sequenced it to be, we've delivered a buy side liquidity with SMT clear accumulation of smart money shorts within a buy side liquid market in a premium. Price has to deliver to this minimum, this opening price down to this new week opening gap, and it only has a little bit of time to get there. So that's how you can kind of anticipate low resistance liquidity runs. I wasn't really gonna drop that sauce anywhere, but I don't really care. And that would have been my final take profit. 3-1 RR smashed. All right. So I don't think I'm gonna watch any more price. Because I have to go do something, but beautiful. You know where my final targets are. We'll see if those get this, if those targets get hit. But aside from that, this is a beautiful morning. I'm gonna go journal, shower, and go to school. GG's, well played.